That means business on Smart 24. My name is Chantal, and I am here with Mr. Masembe Michael from Uganda Revenue Authority. We are talking about income tax, and we had broken down first of all what income tax is, who is taxed, how are they taxed, and all those things. But we are still breaking it down. We just say, just grab a cup of tea and let's have the discussion. So, Mr. Masembe, we were getting into the discussion of the thresholds of the people who are taxed and the percentages. I like the flexibility of the system, that me who earns $1 million shillings, I'm not taxed like the person who earns 20 million shillings, which should be good news because now that's progressive.
Yes, indeed.
However, I understand there are two major types of people when it comes to this income tax. That is the resident and the non-resident. Okay.
Yes.
Who is the resident? Who is the non-resident? Then maybe we can go to the thresholds.
Okay. Ideally, we look at a residency. If you're a resident, it gives you a softer cushion in the treatment for tax, if we should look at it. And ideally, majority of our business operators in Uganda are resident business taxpayers.
So a resident business taxpayer is me who is a national.
Okay, if we look at Chantal, yes, you may be a national with a permanent home in Uganda, because we look at it someone who has a permanent home in Uganda. Okay, so you're a resident taxpayer.
Right.
Okay, and then the other scenario is we may have people who may not be actually nationals, but when they have spent averagely for the past 3 years, so 2020, 2021, and 2022, they have been in Uganda in each of those years for 122 days.
Minimum.
Okay? Minimum. Or within this particular year, they may not have been here 2021 and 2020, but in this year, 2022, they have been here for averagely 183 days. So the way we shall treat this person
is different.
That person is considered a resident in this case. And so even if we are to look at their maybe payment, the other 235,000 that we said we first knock it off. Yes, we'll knock it off. Otherwise, someone who has been here for 60 days in a year and they are earning maybe employment income, we will tax it even if it is 100,000 or 200,000. We will tax it starting there without giving them the cushion of, we will not tax that first 235,000. No, we will tax it head on, whichever amount that we meet.
Because we're not sure if this person is going to stick around anyway.
Exactly. And then there is the other assumption, because we do not conduct the Ugandan tax system in isolation of the other international tax systems. These cushions exist in Kenya, in India.
Because I was actually almost asking, what was the basis of some of these terms?
Yes, indeed, yes. And so we know that whereas this person is here for only 2 months to do this work, and they are earning this maybe income, back in India or back in Turkey or wherever the country they are coming from, they have enjoyed a cushion. It may not have been 235,000.
Could even be more.
But the law, the other side, has given them a cushion. And we expect that they should not benefit from the same in 2 jurisdictions. Okay? And that is basically it. But now there is when it is a company. Now for companies, we will consider that entity a resident if it is managed in Uganda, if it is incorporated in Uganda, and where we have visible view of their operations within Uganda. So there are those dynamics. So the company might not have been actually incorporated in Uganda, and they may tell you, no, you cannot tax us according to the rules, the Ugandan laws, but no, we'll tell you, we see your management is in here, it's running and solid, and so for that we see operations and we will treat you as such.
Well, there is a broader discussion that maybe we'll have at a later point, maybe when you get to revisit, about profit repatriation. Because it's been a concern for very many Ugandans who think these companies come here and take lots of profit that is not taxed out of, and then we are missing out as Ugandans. But that would be a discussion.
Yes,
for another
we
time.
have.
But at least we've
policy
understood. Yes, but at least we've understood that if this company is not incorporated in Uganda,
yes,
definitely they have to pay the taxes.
They have to. They have to. As we see their operations now, there is one thing. Basically, even when we'll have to go back to this discussion later, but the common norm is tax must be paid where income is sourced. So if you're making sales in Uganda and it is Ugandans who are paying you that income,
then you have to pay
that part of profit from the sales and incomes made in Uganda should be, you must pay tax on that particular part within Uganda. It is, these international tax rules are applied across. Now it depends on the capacity of Uganda as a country to be able to claim that part that belongs to it, because if you don't claim it, it will be reported in another country and that tax will be earned by that other country, and so you lose as a country in that regard.
Now I would like to understand, what is the importance of all this message we are sharing to an ordinary Ugandan out there, or to someone who intends to come and do business from either a certain district or even a neighboring country? Why is this information important to someone out there?
First, I will point it to our revenue performance for the first 3 months of the financial year. We saw the major tax heads performing. One was on top was pay as you earn. Pay as you earn. I saw next there was value added tax, followed by local excise duty. Okay. Now, when you look at that, it points to a fact that it is employees, people who are in formal employment and roles that contributed the most huge part of tax revenue.
Yes, because it's pay that is leading.
Yes, exactly. And so the question that it begs here is, where are the other business operators, the other enterprises that you see, and we see they are making profit, or they are making some money, where are they in contributing their fair share on tax?
Yes.
Okay, I will put it. Still, whereas within the tax rates being contributed, we had sectors of wholesale and retail. Wholesale, retail, and manufacturing came as the top contributing sectors. Wholesale, retail, financial sector, and ICT. We saw them contributing. But then you see the direct tax contribution, and by direct tax we mean the tax on profit, tax on income generated by these entities was not. It was not speaking in terms of what would be expected in terms of the contribution to the overall income made in the country. So why we are pushing the agenda on income tax is especially to encourage our Ugandans, our business operators, the manufacturers, anyone who is in an income generating activity, that you have certain obligations to meet. One, to register with the URA. Two, to declare that income to URA. First, to register, you get a tax identification number. Instant. Yes, instant, within 5 minutes. Whether you're a company or an individual, on your phone.
I can attest to that.
Yes, thank you. Now, two, after you've registered, declare to URA. If there is a loss, there is no tax to pay. Actually, if there is a loss, you carry it forward into the next year, and we'll knock it off before we look at your other profit. If you did break even, meaning no profit, no loss, then we are good. There is no profit to tax.
Right.
But if you made a profit and you're a company, whatever the profit is, pay off the 30%. Okay?
That is for a company.
A company.
So for a company, it is
30%.
30% standard.
Standard.
Okay, this is resident.
Yes. Okay. So if you're a company, pay off your 30%. Then if you're an individual and your profit is above 2,820,000, if you're an individual and you're making a profit which is above 2,820,000, then your tax will be paid either as 10%, or it is more, 20%. If it is more than that, 30%, or if it exceeds 120 million as profit, there is an additional 10%.
So if it's above, you said if it's above 2.8 million, I am paying a 10%. But also this varies with certain groups. So for example, I'm at 50 million.
Yes.
I'm paying a different percentage.
Yes.
So it depends on how much I would have made that year.
Yes.
And then you said if it's above 100 million?
120 million profits in a year. There is an additional 10%.
So that means if I was at okay, how much? What's the percentage if I'm like at 90 million?
90 million. Okay, that there I see you're within 30%.
I will be within
30% bracket.
30%.
For so amounts which are above 4,920,000. Above
4,920,000.
Yes. So
it would be 30%.
30%. Yes.
So if it's 30%, that means if I make 120 million, yes, I'm going to get this 30%.
Yes.
At the 10%.
On the 20 million.
On the 20.
Okay.
Or on only the 20 million.
The additional 10% is on the
20 million.
On if you said if your million is your profits are 120.
I'm trying to calculate.
Yes.
Say someone who is, because these vary, the percentages vary.
Yes.
Someone who is about 900. Who is earning about 90 million.
Yes.
In profit.
Yes.
Pays 30%.
It is in the bracket of 30%.
In the bracket of 30%
yes.
in interest.
Yes.
So if I am paying if now next year, say for example, I get 120 million.
As profit?
As profit.
Okay.
That means I was in the bracket of the 30%.
You're still in?
I'm still in the bracket of the 30%.
Unless you earn 121.
Oh.
It's above, if you're above 120 million in a year, that is when the additional 10%
is added on the 30%.
Yes.
So that means I'm going to be paying 40%.
Practically, yes.
Practically 40%.
Yes.
That's what I was trying to get to. So if you're above 120 million, you will be paying an additional
10%.
10%.
Yes.
Okay, makes sense.
Yes.
And this
that is for individuals.
For individuals, yes, for individuals.
Yes.
And then for companies, it's a standard 30%.
Yes.
Great. At least, okay, we had talked about the thresholds. At least now we have got the thresholds of which category do I belong to.
Yes.
Now, what are some of the things you have seen or the mistakes you have seen that business owners and individuals make that have put them in trouble when it comes to URA? Because I believe these people need to understand why they are paying need to understand how they are paying the tax and how they're getting themselves in trouble in the first place.
Yes. The first is pertaining to registration, and they are not keen on keeping their correspondence with URA accurate. The email address. All transactions with URA go to your email address. Okay, and wherever you made an amendment to your registration, a declaration to URA, a payment to URA, an objection to an assessment to URA, or even if we are sending you an assessment, this comes to your email address. As a business operator, have sight into your inbox, especially where URA correspondences go.
Right.
You get it? So I have seen scenarios where URA tries to call a phone number, it was disconnected years ago.
Because we change numbers every now and then, yes.
Amend that with URA. The address you have shifted. During COVID, you left Kampala Road, you set up shop in Bwaise. So you've changed the address, but URA is not aware. And even beyond that, your email address has also changed. You get it? So URA is actually trying to get in touch with you, but there is no way. So at the end of it all, you will find that the URA officer is left with no point of contact with you. You get it?
Yes.
And the nearest he knows to get contact with you is possibly to go to, at times that's where you see us having agency notices.
And points where we have enforcers.
Yes, exactly. So because the first points of contact with you have failed.
Yes.
Then I look for the next. And so I may issue an agency and it brings you, and maybe we can get to discuss, maybe with your bank, maybe with your tenants, or anyone who has to pay. So that is the point where we need to have contact with you. We need to have these meetings. We know circumstances, financial, economic in the country have not been good. Let's talk and understand. Let's revise. I'll tell you, URA raises assessments, tax assessments. Let's say 10 million. If we raise assessments of 10 million. When we have discussions, and we really do have these discussions and objection appeals and everything, those procedures, to discuss what is the reality. The way I see things as URA, you imported things of 100 million, but I don't see you selling them.
And what exactly happened?
What happened? So I'll issue an assessment on the items over 100 million because I think you sold them and you never declared. For me to get to understand the fire that gutted into your warehouse, it may be the discussion that I need to have through the phone call I'm trying to make you, the SMS I'm sending you,
the email. Yes.
You get it? And in such a case, when I don't have that, then I'm in the dark on that part, and I'll issue an assessment which on your part will look arbitrary. So let's have the discussion happening, and I have seen scenarios, 10 million becoming 2 million, or being completely erased by a discussion. And actually at times someone even claiming for a refund for
if they had paid and
taxes in advance, and then this pay, maybe the taxes overpaid. We've seen those refunds. So there are many things that can happen. So you asked the mistake, that break of communication is a big mistake. And by the time we get to sit on a round table, penalties, interests have piled up. At times you find the penalty and interest and fines are more than the principal tax that ought to have been paid in the first place. So that discussion needs to happen. Yes, we have intermediaries, the tax agents and the clearing agents. They are big supporters of the revenue administration process. They assist many people. I really, really need to applaud and appreciate them. But they know the regime in which they operate, that this regime is not supposed to keep you in the dark. Whereas they help you to facilitate this process, you must remain in the know. So whereas they get notifications, you must also remain aware of what is being communicated. When you give someone 10 million to pay for your tax, do you receive that message from URA that 10 million received?
Yes.
Or do you give him 10 million and you tell him, for me, I want my merchandise here. I don't care what you do with the 10 million, I want my merchandise here. You get it? That needs to be, so it's a big mistake. And usually, some of these mistakes are unearthed and they are understood by the taxpayer when maybe they switch from one agent or a support person to another. I need to re-emphasize, they are big facilitators of the process, but as a taxpayer, keep in the know. Their support does not keep you out of the channel, but they are just at the front of facilitating you. The other is research, or trying to take an effort to understand your sector. As business operators, we take time to study the market, to study the value chain, where we source, where we are going to sell, what are the current prices. Why don't you take time to understand the tax about your item? Because the tax actually affects your business goal of making higher profits.
That's very true.
You get it?
Determine the prices as well.
Exactly. So try to understand the tax. Don't first load items into a container or put merchandise into your shop, and then after then you ask, what would be the tax I am paying? No. Understand it from the onset, and then ask yourself, will it make business sense if I have to pay tax and sell these items? At the end of the day, will I have a profit to take home? Or am I only setting this business to pay tax and at the end fizzle out and I'm no more come to 3-4 years ahead? So those are major mistakes that I see on my part, and I think it can be corrected. There is one thing I mean to say. There are withholding taxes. Okay?
I wanted to get to that.
Yes. There are withholding taxes that you have earned. You've supplied someone, they tell you they have withheld money, and they are taking it on your behalf to URA.
Yes.
And you don't take an effort to track it. Okay? When someone retains your 6%, make sure you have been declared by that person to URA and you have your tax credit certificate. Someone was supposed to pay you 2 million shillings. They have retained 6% of that. It means that tax is already been paid on your behalf, Chantal.
So that means I don't have to pay income tax on that?
No, it means that... no, it means
because
that...
that's the question I wanted to ask.
It means that at the end of the year, when you go to URA and you file a return, and the return is telling you, Chantal, to pay 100,000 as tax, you will say yes, 100,000 is okay, but minus the 6% that was already brought to you by the person I sold goods to. You get it? So at the end of the year, we will tell you have this tax to pay, but that tax will be minus the withholding tax that was taken from you. Let
me paint a picture here.
Yes.
I do business for one of the government entities, because it's usually government entities that deduct the withholding tax.
Mainly, yes.
Mainly, that's the experience I've had personally.
Yes.
Say you do work with say URA or UNRA.
Yes.
You provide the service.
Yes.
And time comes for payment, and the 6% is deducted.
Yes.
And then I am paid
less.
I'm paid less of the 6%.
Yes.
So when I am filing my returns
to URA
at the end of it all,
yes,
and maybe I have made say 50 million.
Yes. And tax of 50 million is 30% of 50 million is what? 15?
Yes.
15.
So if I am supposed to come and pay 15 million, I'm going to have to less it by 6%.
You will less it by, let's imagine the 6% that was deducted by UNRA was 3 million. Okay? 6% was 3 million.
Yes.
So you will say, okay, URA, I filed my return 15 but minus 3.
Oh.
So you pay 12.
Oh, that's it. Okay.
Yes.
Because I was getting concerned,
yes.
Especially having broken down for us that income tax is off the other
profit.
Expenses.
Yes.
So you're getting it off the profit.
Yes.
And I'm thinking to myself, I have been taxed that 6% before I could even remove my employees' money.
Yes.
And I was getting concerned.
Indeed.
But now it makes sense.
Yes.
That it makes sense that I can actually go to your area and whatever was picked off, I have to pick it off.
It is your right. And for as long as you can trace it back, it is all claimable.
So that means I have to make sure that whoever has deducted the 6%
yes.
has filed.
It has filed, yes.
How do I make sure of that?
Okay, one is you get into first, you will ask them if they filed. I mean, you've created a relationship with them. Okay,
that's
yes.
True.
But the moment that person, so in this case UNRA, when UNRA deducts this money from you, they have to file in the next month that we paid Chantal this amount of money and we deducted from her this 3 million.
Right.
So the moment they file it to and report it to URA, for you automatically you get what we call a tax credit certificate. So the moment someone withholds withholding tax from you, within the next month you must get a withholding tax credit certificate from URA. If you don't get it, go to them.
So I can actually call URA and be like, okay,
yes. I supplied this.
So I need my certificate.
Yeah, but ideally the other person
is not supposed to.
Yes. Remember, you agreed they should pay you 100 million. They paid you less, with the promise that I'm taking this man on your behalf to URA. Yes.
Even after not knowing that.
But where it fails, yes, we are glad to intervene.
But the fortunate bit is that it's always indicated that withholding tax has been deducted.
Indeed.
That's the fortunate part. So that's the beginning part.
Yes.
Unfortunately, our time is fast spent. And we have to come to the end of this discussion, though I felt like we needed to keep going because there is a lot of information that we need to share with our dear viewer. But what would be your parting shots at the moment? Maybe we can plan another time, we come and have another extended discussion.
Yes.
But what would be your parting shots?
Okay, yeah, we are, this is the end of November. We
Yes.
are into the last days of November, and we're getting into December. The year is, we are getting into the last 6 months after the year ended. And so we expect that people are going to be filing income tax returns for the financial year that ended June 2022.
That is
So,
2021, 2022 financial year.
Yeah, you're given 6 months in which to report and file your returns and even pay the final tax. So don't wait for the December hustle. You need to enjoy your Christmas.
Your Christmas, yes.
You need to enjoy your festivities. Some people want to go for holiday. Some people want to go to the village and be with their loved ones.
Right.
We pray this Ebola doesn't kill the happiness that we want to have. So file your return now. Pay that tax now. Be it the provisional tax, file and pay now, and live a free life. Yeah, that's my parting shot.
So that your aid does not come knocking on your doorstep or sending you enforcers.
Yeah, we don't want to get to that point. We don't want to.
Well, thank you so much for having the discussion with us and for availing us with the information that we need to be able to make better decisions, financial decisions, because it's very important. You've been watching Smart Means Business on Smart 24. My name is Chantal, and just this part is what we have finished. We will be coming back in the next few minutes, just breaking down the top stories of the week, so make sure that you stay with us. But the take home is, please file your returns. It's not as bad and complex as it seems, plus there are systems that can help you file these returns, that can avail you with all the information that you need. But you can go, if in case you have any questions, you can send an email to services@ura.go.ug and you'll be able to get the assistance. Also, you have contacts, you have 0800117000 or 0700217000. These numbers are toll free, so you can contact URA and have all the questions answered whenever you want to ask those questions. For now, a very good morning.